This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by SmartBooks, provider of bookkeeping and accounting for businesses. Let's get started. Welcome back to the podcast, Greg.
Thanks for having me. We survived tax season.
Yes.
I made it.
And this is going to be the first episode in a long time we don't talk about beneficial ownership reporting.
Yeah, there's nothing to report. Yep, no change.
Awesome.
So we're good.
So what are we talking about today?
So, it's the end of tax season, and I kind of take this time to reflect back on things that happened, patterns I saw. And one of the things that popped up this year was W-2 withholding. Not something that maybe directly impacts all business owners, but if you're an S-Corp or a C-Corp, it could definitely impact you. If you have business income or passive income that you're obviously not withholding on, then that could impact your tax situation and may warrant some extra withholding from your wages. Maybe your spouse needs to update their withholdings. I would say it's more of a maintenance item and not super fun to talk about. We're not talking about tax savings and stuff like that, but it's like getting the oil changed in your car.
Right. We do this to avoid underpayment penalties and interest, or potentially with a major change and a reduction in income to avoid over withholding, right?
Yeah, you certainly don't want to be using the IRS as an interest-free bank account throughout the year. You want that money now. Some people, they love to get that check at the end of the year, and it's kind of a springtime bonus for them. Totally fine. Maybe you want to withhold more. But I did, like I said, I had a couple of clients this year that income went up, withholdings maybe stayed the same or went down a little bit. They kind of got that surprise bill that we don't like to talk about.
How are the penalties and interest actually computed?
So taxes are actually due quarterly as you earn income throughout the year. Obviously, as a W-2 employee, you're paying that throughout the year. But, if you're earning income that you're not withholding on throughout the year, then you should be paying tax on that quarterly. That's why we pay quarterly estimates.
So let's use round numbers here. Like, say I'm getting paid a salary at my S-Corp of $100,000 a year, and then my S-Corp produces an extra $100,000 of taxable income, of profit that year. So I basically have $200,000 of taxable income, but I'm only withholding at the $100,000 rate, right? So how did they calculate the extra penalties and interest I owe on the second $100,000?
Yeah, so maybe you're only withholding on the extra first $100,000. You're not withholding on the extra $100,000 there. So, say 20% tax break, you owe $20,000 in tax. If you earn your income, pro rata throughout the year, it's $5,000 basically in tax that you should be paying each quarter. Every quarter that you don't pay that tax, they calculate interest and penalties. That number changes with inflation. It used to be advantageous not to pay your quarterlies because a few years ago, we're earning 6-7% in interest in their regular savings accounts. They were actually almost making more money. The IRS has since caught up with inflation, and that window has now closed.
So technically, what do you need to do? Call your CPA, probably the first thing you'd say.
Yeah, you could call me or you call your CPA, and we can certainly walk you through it. The IRS actually has a pretty cool interactive tool that you can use to calculate that withholding. And it's definitely something you want to do. Like I said, it's like an oil change. You want to do it maybe annually in January, just something to temperature check and make sure that you're still withholding enough. If you get married, have a kid, maybe you start a new business, the way that you earn income changes. Like I said, if you start a business and your salary income goes down, but your business income goes up, so maybe you're like, oh, I earned $100,000 last year, but I'm earning $100,000 this year. Everything should be the same. Not necessarily, because the way that you're earning that income and how taxes are being withheld on that income are different. And that's what happened with one of my clients. The wife, her business started earning some income. His W-2 salary stayed the same. Their withholding stayed the same, but her income was not being withheld on. So they got kind of killed at the end there. So I would say, things like that. So type of income that you're earning, if you pick up a second job, have kids, get married, divorced, stuff like that, you certainly want to reassess that situation. And like I said, the IRS has that tool online. You could always call your CPA. They can walk you through it. And then in years that you do have those changes, not a bad idea to maybe do some year-end tax planning.
And states have their own flavors of the W-4, right? I know in Massachusetts, what's it, an M2 or W-2 or something like that?
Yeah, yep. I think it's an M4.
M4?
Yeah.
But, is it common that you need to fill out a separate state form because there's a significant difference between state and federal withholding rate?
Yeah, you should definitely be looking at both. The states, it's a little less of a hit because it's usually a lower tax rate, but definitely be taking a look at both. Obviously, the federal one is a little bit more significant.
Right. I don't know, we're talking mostly about W-4 withholding, but that needs to be planned in conjunction with your quarterly estimated tax payments, right?
Yeah, yeah. What I'll do with my clients is I'll say, hey, give me a copy of your latest pay stub. I'll extrapolate out the pay stub to basically project out what their W-2 is going to look like. And then we kind of use that information in conjunction with the business income, what we're projecting that to be, to project out what the entire tax liability is going to be. And I do have some clients that will pay estimates. I have some clients that will use that withholding as a way to pay their estimates. It's kind of whatever you feel most comfortable with, want to do, stuff like that.
Is there any pro or con with using extra withholding versus estimated payments?
I wouldn't say it's a pro and a con. It depends. Obviously, if you're paying it through payroll, if you're over withholding through payroll, then you're also going to be paying the extra payroll taxes, FICA, Medicare, stuff like that. So you are paying a little bit more in tax with that. But sometimes if you haven't been paying your estimates throughout the year, you might get to year end and want to do a bonus withholding. I don't think payroll companies typically love this because I always have problems with it, but it is an option. You kind of pay yourself a year-end bonus of, say, like $50,000, and $30,000 of it goes to the IRS, and $15,000 of it goes to the state, and then the other $5,000 is used to pay payroll taxes. You get a check in the mail for $0 because everything went to the respective taxing authorities. The benefit there is that the IRS looks at your payroll withholdings as being made throughout the year, not maybe like a year-end bonus. So you can avoid your underpayment penalties that way.
So if you've underpaid quarterly taxes, you can avoid penalties by doing an extra big payroll withholding at the end of the year.
I don't know how great your savings is because you're paying those payroll taxes. But if you're an S-Corp owner and you also haven't taken your salary for that year, might not be a bad idea.
Right, because in that scenario, you're bonusing yourself above and beyond your regular pay rate in order to have enough money to make a big tax payment, right? So that's what you mean by having to pay extra payroll tax. Normally, you wouldn't be paying yourself a $50,000 bonus and have to pay Medicare, Medicaid on that, depending on if you're above the Social Security threshold or not, right?
Yep.
Okay.
So the other thing to watch out for this year, especially new tax laws. We probably won't know anything until December 31st anyways. So it's kind of a shot in the dark. But if things change throughout the year, maybe it's a good time to reassess. Do I need to withhold as much? Should I start withholding a little bit more? Stuff like that.
Cool. Anything else the audience should know about payroll tax withholding? It's a riveting topic.
Yeah, it's probably not going to be the most listened to episode, but it is an important topic. What I find is that sometimes the withholdings will go down, but the way that the income is earned might go up. And now you kind of have that differential growing, and it's a big surprise to a lot of people. Some people, they might get hit with like a $3,000, $4,000, $5,000 tax bill, which could be significant to them.
Right. And the withholding is for corporation entity types, right? C-Corps, S-Corps, LLC owners don't go on regular W-2 payroll, so they need to do everything through estimated.
If you're an LLC owner taxed as a partnership, you should not be taking payroll. The IRS does not like that because it can mess up the FICA and Medicare calculations. So you can end up overpaying FICA or underpaying FICA and stuff like that.
Awesome, Greg. Well, thanks for the update. Hopefully this is helpful to some listeners.
Good deal. Yes, and we're here if you need us to help you calculate that.
How do folks reach you, Greg?
They can reach me by email, greed@smartbooks.com, or you can go to our website, smartbookstax.com, and book an appointment directly with me there.
Awesome. Thank you, Greg. Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage SmartBooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com or message me on LinkedIn where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.